Good morning and welcome to Bazaar Morning Call. I am Anuj, with me, Prashant and Sonia. We are starting the penultimate day of what's been a very treacherous series. It started on such a good note, but is ending on such a poor note because of what's happening globally. And once again, for our market, there will be a 200-day moving average test, which the market's been sort of, just passing for the last couple of days. But this morning, the global risk off once again is just way too high. The dollar index is continuing with its strength as we speak. It's the highest point, at the highest point of the last 20 years, 114.56 now as we speak. And India is finally participating in this global risk off, something which it avoided for better part of the last 1 month. And we are set to open below the 200-day moving average of 16,990. And the big question is that, does this mean that we now start to participate as much on the downside, or is our outperformance going to remain intact? That, of course, is the big question. SGX Nifty indicating a big gap down, 180 points down now. 16,855. Morning.
Hi, morning. You think it was the word decoupling that ruined it for us? The minute people started saying India is decoupling, bam, here it comes, right? The fall in the market. But I mean, jokes aside, it hasn't looked good at all globally, as well as Anuj was saying. 6 straight days now, the US market's under pressure, and the Dow was down quite a bit yesterday too. The S&P 500 has now hit a new low for the year, so it's officially gone into bear market terrain. The 3600 level was also quite keenly watched. It's almost there. The SGX Nifty not looking good. Asian markets are also under pressure as we speak. So the Nikkei, last time I checked, was down about 250 odd points. And so far in September, we've sold FIIs, that is, have sold about 10,300 crores. So it's been quite hectic as far as the outflows are concerned. You know, the big question, right, Anuj, I mean, something we've been talking about for a while, at a time when the dollar index is near a 20-year high, when FIs are selling, not just in our own markets, but world over, is there any place to hide? I mean, India was so far a safe haven, but that doesn't look like the case anymore.
You know, Sonia, obviously that is the case, but we are still outperforming. Even we're falling less compared to the globe. And I'll still maintain my view that normally when you have May-June correction, then a rally, and then in September, October, the market gives you a move back towards the lows. Anecdotally, those lows are not revisited. I think we're going through a phase of flushing out of excesses, and I mean, if you build portfolio in perhaps this decline, this will be going forward. With benefit of hindsight, 1 year down the line, you'll realize that this was perhaps that buying opportunity. But right now, we're talking about near term. So in that sense, of course, yesterday's market action was clearly quite weak for the bulls. Sell on rally got firmly established yesterday. The market gave 2 rallies yesterday, and both were sold into. It's just that because of some programmed trades right at the 200-day moving average, we saw some buying yesterday. But the sell on rally is intact now till you reclaim the nearest moving average, which is the 5-day exponential moving average, which comes in at somewhere around 17,250. 17,250 technically is also a very important level. Above and beyond, below this, the markets have made some decisive moves. So that's why this becomes significant. I think for me, the bigger worry is what's happening to the Bank Nifty, because remember just 5 or 6 days back, the Bank Nifty hit an all-time high. And from all-time high, it's corrected about 8% in a matter of last 5 days. So I think this is really very interesting because IT might, just in the near term, might stay resilient because of currency, because we are heading into earnings. Nasdaq did well. So the Bank Nifty is beginning to fall more. And that, I think, might be a trade which might continue, the algo trade, because of what's happening. The Bank Nifty, in fact, is still 2,000 points off its 200-day moving average. Now, I'm not saying that we go there. But what I'm trying to say here is that because it had such a massive outperformance, the risk also becomes bigger on the Bank Nifty. There's expiry tomorrow, so you expect some kind of momentum, which is clearly visible now. So let's see how things move. This FI selling is now approaching $2 billion for the last 5 days. And this was the fear that the ETF buying, which propelled our markets in last month, is it deserting us because the momentum has been lost? So that's something to find out. I think the cue to watch is the USD INR. For the equity markets to stabilize, for this algo trade to go, which is self-financials, you need to see some stability in USD INR. It doesn't need to go back to 80. It doesn't need to, strengthen a lot. It just needs to stop falling. Right now, we're falling like 9 pence on the currency. And when that happens, obviously, the equity markets also suffer. So that's another reason that, we are seeing this kind of decline. Prashant, hi, what are you tracking?
Guys, so this morning, if you look at US futures, right, they're down sharply, 0.5%, 0.75% lower. So it's a sharp turnaround, and I was trying to figure out why this has happened. The reason seems to be that Apple has basically indicated, I read it on Bloomberg, that Apple has indicated that they will delay the ramp up in production because they are seeing demand faltering. So that is the big headline, I think, which is pressuring US futures right now. You look at the S&P 500 futures, they're down 0.75%. Overnight US markets did not do very much. They were flat. But this morning, they're down sharply. And you look at tech-sensitive, markets which are very, not dominated, but have lots of tech hardware components. You look at Kospi, that's the Korean market, which is down sharply. You look at the Hong Kong market, you look at a bunch of others, and Asian markets are selling off. So I think that's basically the new thing which has happened, to which Asia, at least this morning, is reacting to, including US futures. Overnight, it's more of the same. S&P 500 down for the 6th straight session. By the way, for the bulk of the session last night, overnight, markets were in the green. They were attempting the pullback. Even when we were trading till 3:30, US futures were indicating a higher start, and they got a higher start, but into close, all of that kind of disappeared. The S&P is at the lowest level since December of 2020. Volatilities are increasing, not just the WIX, but the volatility of the WIX. They are both above the May-June highs that we saw this year. That was after the invasion, the Ukraine-Russia war started. DXY is back above 114. It looks like it's headed to the next target, logically, is the 120 kind of zone. So we'll see if it goes to that. But the pace of increase last 2 or 3 days has been very, very fast. US yields, the 10-year is back at 4%. And by the way, last night's move, and it's a complete turn, yields were lower and they jumped. They ended 2 basis points higher, but from the lows almost about 8 basis points. That was not just because of Fed speak, which was hawkish, but also because US economic data is resilient. You had things like the consumer durables data for August. New home sales jumped 28% month on month. This is US. It could be a monthly aberration and maybe things normalize, but for the month that they reported, 28% month on month increase. And we also had the consumer confidence data, which was strong. All of this suggesting that this high frequency numbers are saying the US economy remains resilient and it should be able to absorb higher rates, which means the conclusion for us is that higher rates are coming, which will be required, as the Fed has repeatedly said, to induce some slack into the economy, which leads to slower growth. So, it's more of the same in that sense. And of course, we had Fed speak as well. 3 Fed presidents, regional Fed presidents, all sounding hawkish, saying the November hike should perhaps be 75 as well. And we are in for a higher, tougher rate environment for longer. That was the unanimous message which came through. Just one thing from Europe, and this is kind of a developing story, but, there were lots of reports which said that there is the Nord Stream 1 pipeline which carries gas. That's the main pipeline which carries gas from Russia to Germany, to EU actually, around which there has been so much controversy. There's been some damage which has been caused. No real indication of whether this is kind of some sort of a planned attack, sabotage, or just some issue which will be sorted out. But I think this is very important. Gas prices in Europe jumped about 7% last evening. And I think today markets there will wait for some clarity as far as the pipeline itself is concerned. So overall, it remains a pretty risk-off kind of environment into which the market here will open. Sonia.
Okay, so Apple dropping plans to increase production, right? You know why that is, right? Because the iPhone, people have realized the 14 is exactly the same as 13 and 12. So.
But wasn't the 13 the same as 12, 12 the same as 11? But each one was...
there's a joke doing the rounds, right? Now, first it was you get the box with the phone and the charger and the headphones.
Yeah.
Then the next year it's without the headphones. The third year without the charger. One fine day there'll be a box without the phone itself. You have to buy everything separate. So that's the joke.
Sonia, you've known my view on iPhone, right? If you're buying the phone for 1.6 lakh, 20,000 is the price of the cost of the phone. 1.4 lakh is the price of your ego.
Of your ego.
No, I am a big fan, though, I must say. Although I wouldn't buy that number
iPhone.
seems to... I'm on an iPhone 6 still, and I'm absolutely happy.
See, now we know why Apple has stopped production. Because there are people like you who are still, very content with the earlier iPhone.
But Apple, I heard, slows down the previous versions. No?
This is working fine, just fine for me. So
the battery suddenly stops working, Prashant. When the new iPhone is launched, the older one.
All conspiracies.
Okay, well, let's kickstart the show on that note. Lots to talk about in the next 2.5 hours. But on the equities front, first up, Gautam Duggad of Motilal Oswal Financial Services says in the very near term, they expect the market to be driven by global developments on the macro front, given the persistent concerns around inflation, rate hikes, currency moves. The RBI's monetary policy this week could also be an important catalyst to decide the sentiment. Subsequently, as Q2 corporate earnings commence, early commentary around IT demand and broad earnings picture will drive the market. He adds that the commodity price correction is providing a silver lining amidst an overall cloudy weather.
Okay, let's get you some money market views then. Kunal Sudhani of Shinhan Bank says that firm prints of the US consumer confidence and durable goods orders could amplify dollar strength. Hawkish spreads peak along with stronger US 10-year treasury yields adds to dollar strength, with dollar index once again near its recent highs. From here, it opens the gates for 115.7 as per the charts. For USD INR, 81.30 acts as support, while 81.90 is a resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says the market recovered some losses from last week as global bond yields eased from their highs. For the rest of the week, the market will take cues from the upcoming RBI monetary policy decision, the second half borrowing calendar, and an announcement of possible inclusion by the FTSE EM GBI. For the week, the 10-year benchmark yield is expected to trade in a range of 7.25 to 7.35%. All right, we do have plenty of stock-specific action today, and we'll get to that in just a bit with our entire research team and our top 10 segment. We're looking at M&M, Gujarat Alkalis, Madison Sumi Wiring, BHEL, Power Grid, and Indiabulls Housing. That's on the radar on the back of positive news flow, and Mahindra CIE, Torrent Pharma, Supriya Life Sciences, NHPC, that could perhaps open in the red, so keep an eye out on that.
Okay, all right. So those are stocks which we will pay attention to as in just a bit from now. But let's just get the global out of the way as always. Matt Orton is Chief Market Strategist at Kirillion Tower Advisors. He's with us. Thanks very much, Matt. It's always a pleasure. Great to have you with us here. This morning, this news flow on... I wanted to ask you if you're an Apple or Android fellow. But I wouldn't go there. We already had a bit of a... but Apple is...
I've got the AirPods in, so
AirPods,
I think that's an indication.
Yes.
That's true. That's true. Matt, so Apple this morning saying that, they're going to sort of ditch the iPhone production increase because demand, according to them, is faltering a bit. And Asian markets are seeing a fresh leg lower. This is adding to a long list of commentary we've heard from companies, large companies in the US, sort of talking about concerns around demand. How would you read this and implications for markets?
Good morning. Great to see you, Prashant. It's hard to get too negative on whatever this headline is. I think Apple is getting in front of perhaps what might be a little bit more of a challenging earnings season. And to what you were alluding to before, the demand for the new phone, they have to come out with the new phone on the standard cycles that they usually do. What that means for the ultimate, purchasing power of the phone, the impact on margin, it's really hard to tell. I don't think we can take any reads to the broader US consumer from this, because the data that we continue to get in real time is supportive of the consumer. It's supportive of the US economy. So it's an anecdote. The market likes to feed off of negative news, so it's certainly a negative catalyst for where we're heading for the next day. But I don't think it's indicative of a trend or anything that is going to be catastrophic for Apple or the broader market.
Matt, good morning. But the market action anyway has been looking catastrophic, right? It's broken the June lows except for the Nasdaq, and the dollar is inching higher and higher. Something we haven't seen in the last decade or so, ever since the GFC, right? So for a lot of people who have been first-time investors, this has come as a bit of a shock. They don't know what to do. What's your view? How much lower for the market from here?
And the pain, isn't even in the equity markets, it's in the fixed income markets too. And I talk to a lot of our clients who have diversified portfolios. It hasn't even, we've had a near historic bad start to the year, in the equity market, but fixed income has had an equally bad start to the year. And it's in regular yield is painful, and in real yields, 10-year real yields in the US are now north of 1.6%. That has been a big weight on equity markets, on valuation compression, and it's really hard to see a light at the end of the tunnel until we know when rates are going to peak. And I think the big problem I had with last week was that during the Fed press conference, we basically managed to out-hawk the hawks. It was very, very challenging to hear that we're still going to have 75 basis points more in November, perhaps 75 more basis points in December, and then a cherry on top of 25 more in January. I'm not sure that's necessary. Inflation is starting to come down in the US, so the impact of equity markets and fixed income is still a challenging picture. And that's why when I talk to clients, it's all about leaning into quality, having companies that have higher ROE, that are actually generating cash, paying dividends and growing their dividends. And I think that can be applied to all markets around the world because quality is working, lower beta is working on these sorts of downside moves. So you want to remain defensive right now.
That argument is fair, but somehow it's not working out in our own markets. I mean, you're saying that lean into quality stocks, into companies that have a high growth trajectory, and perhaps have their balance sheet intact. Case in point for us is the IT sector, right? I mean, these companies are best in class worldwide, but now these stocks are down about 30-40% from their peaks, perhaps because of the margin pressures, the impending recession across the globe. Be that as it may, do you think that this is a good time to perhaps enter into some of these beaten down pockets like the tech sector, in the Indian markets particularly?
I do. I think in the Indian markets, information technology has actually held up a little bit better on a relative basis over the past week or two. IT services has been more of a bright spot. And to your point, when you look at where global spend is around corporations, it's investing in better technology infrastructure. And a lot of the companies that are heavier weights in the Indian technology market are providing services to global technology companies, to global services companies that need these technologies. So I would say that the weakness that we've been seeing year to date is definitely an opportunity for longer term investors. There could definitely be more pain in the short term because it's going to trade with the beta of the market. But when you do start to see the market trade more on fundamentals, we're heading into an earnings season. Positive numbers, I think, could be a catalyst for investors to say, enough is enough. It's been discounted enough for me to start to dip my toes in. And I think for those who are willing to play the longer term game, it's a good time, especially in India, to start accumulating information technology.
I think that's a very good point. That's one large group of stocks here which is substantially lower. It's not participated in the rebound generally. Overall, Matt, there have been some who've come on the program these are US market commentators, etc., who say that, this time of the year, September, October, is usually when things kind of can get a little tricky, because you're kind of looking at the end of the year, but a lot of the problems that you started the year with have not gone away. Next year is still looking a little, people kind of start to throw their hands up in despair. So you get these, mini accidents. Anything in the market out there would suggest that? You mentioned bond markets. I was reading yesterday that US Treasury market liquidity is actually just completely collapsed. You have many other indicators which are flashing red. Any thoughts on that, Matt?
The liquidity situation is a problem. From speaking with some of our traders at our firm, where we have a pretty diversified fixed income franchise in both treasuries and credit, and it's not a challenge to get the issues that we want or to make the trades we want on behalf of our clients, but liquidity is a problem for the overall market. I don't think we're anywhere near the point where something's actually going to break and that creates an even larger market event. We're still far away from that, but liquidity is a problem. And even in the equity markets, when you go further down the market cap spectrum in the small cap space, bid offer spreads are wider than they tend to be. And I think it's just a reflection of negative investor sentiment. And there just being a broader reticence to want to put money to work. It's really hard to jump in front of the truck per se and not know if it's going to stop for you. And I think that's the problem that a lot of investors have. But like I said before, for those who are willing to play the longer game and to build a more diversified portfolio, this is actually a good time. We're moving yields to a more normal level. I mean, we forget the past 10, 12 years of easy monetary policy around the world is not normal. We had $18 trillion of negative yielding debt around the world, and most of that's gone. The pace at which that has happened has been very, very uncomfortable to a lot of investors, and especially first-time investors. But to be able to get 4% on, 4% plus on a 2-year treasury yield in the U.S., being able to get high-quality corporate bonds at 5-6% and get equity valuations right now, the S&P 500, 16.5, 17 times forward earnings, that's pretty good to set up a diversified portfolio for the longer term. And the key to manage some of the short-term pain is to be very tactical with your asset allocations. And that's what we're advising to clients. And even in global portfolios too, leaning out of Europe, leaning more into India and Latin America, like we've talked about in the past, I think that still makes a lot of sense.
You literally snatched my next question, but I'll still ask it. What's happening in Europe? You had the UK where clearly things are, almost looking like collapsing. In Italy, we have now a right-wing government where, and again, that talks about some kind of collision with the EU. So do you reckon the more money will flow out of EU from here on to other asset classes?
I do think so. Europe right now, to me, is not very attractive. And I'd say there's much better opportunities around the rest of the world, unless you're, there's of course going to be single companies that are attractive, but as a whole, it's hard. And it's the inflation problem. Europe right now is importing inflation. It depends more on China, where there's still COVID lockdowns for a lot of their imports. They import most of their energy, which is clearly an issue with what's happening in Russia and Ukraine, and energy prices are still elevated. And we're heading into winter. So what you're seeing in Italy is, I think, a reflection of public discomfort with inflation. What we saw happen in the UK is a direct response to not being able to deal with inflation, to keep the consumer afloat. And you don't have the same degree of those challenges in other regions of the world. So I think on a tactical basis, even though Europe is cheap, I wouldn't want to catch that falling knife right now.
Okay, wouldn't want to catch the falling knife, especially in markets like Europe. So perhaps investors sticking to or leaning towards markets like India and Latin America, as you said, right? Thanks a lot, Matt, for joining in, and have a great day. That's the word coming in from our equity expert globally. Let's take a quick break. On the other side of the break, our entire team will be with us to help us with the list of top 10 stocks. Stay tuned. Welcome back to Bazaar Morning Call. This morning, the SGX Nifty is indicating that the start will be well in the red, so down about almost 200 points now. It's not looking good across the globe either, so let's get our entire research team to help us prep for the day. What are the stocks to look at? Anuj, what's on your list?
Sonia, yes. So for starters, this is looking like a big decline. So I think after 200-point downtick, there's no risk reward in shorting, right? You want to see if some stocks are showing relative strength. Pidilite is a case in point. I mean, I've normally noticed that, in these times when crude's going down and when globally there's a bit of a risk of, this is a stock which outperforms. It's already done that. But again, if the market stabilizes, perhaps this is something that, you want to look at. The other one I'm tracking this morning is Infosys. I've been saying that, some of these stocks are extremely weak, but they keep having tactical rallies. Infosys, I think, is in the middle of one. And with the way currency is depreciating, there's a bit of an algo trade which is playing out right now to sell financials and buy IT. It may not last for long, but at least there's some relative strength. So again, that could play out once you have a gap down and after that. So I'll keep an eye on both these names. But my sense is the stock of the morning on downside today could be Torrent Pharma, because the acquisition that they're making looks quite expensive. Ekta, hi morning.
Hi, morning, Anuj. Well, it's interesting because I did hear the call as well. While it is an expensive acquisition, it is also a segment which is showing strong growth, which is the pediatric dermatology segment. So maybe the market is going to forgive the company for shelling out 2,000 crores for Curatio Pharma simply because they have a strong portfolio of products. For example, their products include the likes of Teddy Bar, which is basically within the pediatric segment and comprised of around 34% of total revenue for the company. This total company, this entire company, which is focused on the cosmetic dermatology sales, is expected to cross around 275 crores of sales in FY23. They did around 224 crores in FY22. The company is also confident of increasing the margins to what Torrent Pharma does in terms of its sustainable India margins going forward. But what could work against them? Yes, they are shelling out 2,000 crores, which values the company at around 7 times sales and also over 20 times EBITDA to sales. But separately, they are also going to probably fund this entire acquisition by a 75 to 85% of debt, which they will eventually look at, reducing by FY25. So these two will probably work against Torrent Pharma, but it is a fast-growing segment. They are acquiring what is the strategic fit, and hence that could probably cushion any fall for Torrent.
Okay, thanks a lot, Ekta, for that. Well, I'm also watching out for Mahindra CIE and M&M. So M&M has decided to sell 2.2% stake that they own in Mahindra CIE for 285 rupees a share. Now, in any case, M&M had a small stake. They had about 11.4% stake in Mahindra CIE, and now that will come down to 9.2%. For Mahindra CIE, it could perhaps be a mild red tick because the stock was running up, on account of perhaps M&M increasing their stake, but now the stake has gone down. We need to understand the rationale for M&M selling stake, but of late, M&M is making all the right noises as far as their capital allocation strategy is concerned. In fact, ever since Dr. Anisha has come on board, they have been selling a lot of stake in the non-core businesses, looking to consolidate their core businesses and grow them better. So all of these noises, I think, will be positive for M&M. And we need to, of course, understand the rationale. But for now, going with mild red on Mahindra CIE and green for M&M. But let's get to talking about more stocks in the news. Sonal has the list for us. Sonal, good morning.
Good morning, Sonia. Let me start with Supriya Life Sciences because the CEO of the company has resigned due to personal reasons. The CEO is Dr. Shirish Ambhaikar, and he will be getting relieved on 30th September 2022. That's in next 3 days. And in the interim, he will be extending services on a retainership basis for 2 years, but not as the CEO. The company has approved appointment of Mr. Rajiv Kumar Jain as CEO with respect from October 3rd. So that stock remains in focus. We also have Gujarat Alkalis, where manufacturing of hydrazine hydrate has started at their Dahej complex. It's a 10,000 tons per annum product, and it is used for backward integration, will be used to make hydrogen peroxide. So that stock remains in focus as well. Motherson Wiring, which will consider bonus issue on September 30th, so should see some green on that stock today.
All right, Sonal, thanks very much for that. More stocks with news flow. Vivek is standing by with that list. Vivek, hi, good morning.
Good morning. Quite a few stocks on the radar. The first on my list is BHEL. The company has received a significant order win for the Talcher thermal power plant from NTPC. Analysts are pegging this order win of close to 10,000 crore rupees. You're also talking about Indiabulls Housing Finance. Some significant relief coming in there with the Delhi High Court going ahead and squashing all of the proceedings against the company. And this is, the proceedings were earlier enforced by the Enforcement Directorate. You're talking about Power Grid after all of the overhang getting removed, some positive news flow coming in on the fundamental front. The company has approved the investment into one of the oil refineries of Reliance Industries. The company has said that the estimate cost for this particular project would be around 328 crores. Some of the other developments in Power Grid also include the company appointing a CFO of G. Ravishankar, and also remember Power Grid will be in focus on the back of estimated passive inflows coming in on the back of the CPSE rebalance. Lastly, keep an eye out for NHPC. Some slightly negative news flow coming in on the back of flooding. One of the company's largest project, the Subanseri, project, could get the commissioning of this particular project could get delayed. So keep an eye out for NHPC as well.
Okay, thanks a lot for that. That's a long list of stocks that we're looking at this morning. But here's a quick recap in case you missed out on any of them. Stocks with positive news flow. There's M&M, Gujarat Alkalis, Motherson Sumi Wiring, BHEL, Power Grid and Indiabulls Housing Finance. While stocks with negative news flow, there's Mahindra CIE, could be mild red tick over there, Torrent Pharma, Supriya Life Sciences and NHPC. But moving on, sources have told CNBC-TV18 that the Indus Tower board met last week on the 26th of September over the concerns about the mounting dues from Vodafone Idea. Nimesh is here with all the details. Nimesh, what are you picking up?
Hi, Sonia. So this is all source-based, and what I understand from sources, the Indus Tower board has written a very strong letter to Vodafone India regarding the non-payment of dues, and there are three specific mentions. One, the entire independent board was very upset with the fact that there has been a long pending overdues from Vodafone India to the tune of 7,000 crores. So first, in a strongly worded letter, they've said that they want this, the entire overdues should be paid as soon as possible. That's number one. Number two, for this month, for the last few months of a few quarters, Vodafone India is only paying 40 to 50% of the overdues. From this month itself, the board is insisting that almost 80 to 90% of the money should be paid, from this month itself. And from November, they want 100% of the dues to be paid to Indus Tower for the services been rendered. In failure of this clearance of dues post November, there is a clear threat of the services getting disrupted for Vodafone India. So that's a very strongly worded letter to Vodafone India. We've written to all the three parties, whether it's Indus Tower or Vodafone or for that matter Bharti Airtel. No responses from any of them. So as I said, this is all source based. Now the key to this whole saga is going to be what next for Vodafone India. One, there are some serious question marks on whether the promoter entities will be able to infuse fresh capital into the company. So that's a first big concern. The second big concern is, will the government of India convert the spectrum dues into equity? Remember, we've reported in the past as well that till the time the Vodafone promoters don't infuse money, the government is reluctant to put in money and convert that spectrum dues into equity. And the third, if there is going to be a service disruption post November, what happens to Vodafone services? Also the fact that Vodafone is not in the race for 5G. So there is going to be a big shift of customers as well. But as things stand, last week, as I said, on 26th, there was an Indus board meet, and in that, the independent directors took a very firm view that all the non-payment of Vodafone India has to get cleared very soon. Otherwise, there's going to be clear, service disruption, and there is a clear threat that post-November or mid-November, there could be, serious service disruptions because Indus Tower is not now reluctant to go on and not, accept the fact that they're not been paying dues for a very long time.
Okay, Nimesh, thanks a lot for that. So that's on Vodafone Idea and Indus Towers board. We'll do one thing. We'll move on and talk a little bit more about the commodities market now, because Manisha Gupta, our commodities editor, is joining in for a roundup of all that's been happening there. Manisha, how's it looking?
Well, not so good, because when you look at the dollar index, we're looking at newer 20-year highs here. So 114.60 is where it's trading. And this is after a White House official has ruled out a currency agreement among major economies to weaken the greenback. So we are looking at strength in US dollar, and that in turn seems to be weighing on commodities. You have the crude oil prices trading at the lowest level since the month of Jan because of the strength in US dollar. Also the high US crude inventories, that number came in yesterday. The markets in the meanwhile also are looking at the Hurricane Ian, which is expected to make a landfall now by the end of this week. It has become a Category 4 storm. Personnel from 14 production platforms and rigs have been evacuated, and nearly 11% of crude and 9% of natural gas of per day Gulf production is shut now. So the crude oil prices on one side looking at the strong US dollar, and on the other side the supply concerns in Gulf of Mexico. So even with that, we are trading with 1.5% of a decline. Decline is what we are trading yet again on another day for the metal prices. So after nearly 1 to 2.5% of a cut yesterday, all of these markets have opened in the negative today as well.
All right, Manisha, thank you very much for that. So we'll keep track of commodities. Let's just take a look at what the SGX is doing before we take a break here, because it was indicating, okay, I think it's a little bit low, a little bit more lower, 193 points down at about 16,845. Just a quick look at Asia as well, if it's all firmly lower or things are moving around. So that, I think, will be useful as well. Hang Seng is down 2.5%. The Taiwanese market is down about 2.25% as well. We'll take a break here. Up next, we connect with Devin Choksi to talk about markets. And later, we have the management of Philatex India. Madhu Sudan Bagaria, the company, joins us on the latest commissioning of the new unit, which has come on stream. We're back in 2.
Welcome back. That's the SGX Nifty down about 190 points. So the start will be rough, and then we'll take it from there. We have Devin Choksi now joining us from KI Choksi Securities. Devin, hi, good morning. Thanks a lot for joining us. Devin, let me start with the large banks, because we had a all-time high on the bank Nifty just about 10 days back, and now that index has fallen about 8%. What's your view on the large financials, and which ones would you buy in this dip?
Good morning, Anuj. Well, I think the subject of lending, I think, which is basically, I think, to the corporate sector, is now probably gaining more momentum. And I think most of the larger banks, including SBI and also, I think, along with that, likes of NBFC, even Axis for that matter, ICICI, all of them have basically been showing an exceptionally good sign of, I think, increasing the lending book towards the corporates, which up till now in last many years, I think, has remained on a muted side for most of these banks. And I think as a result of which, we are likely to see a higher amount of credit growth continuing from this particular segment as well now. And at the same time, on the other side, we have the retail credit, which is basically expanding at a very steady pace. Some of the private sector banks are growing at around 20-25% rate of growth even in the retail credit space. So that remains, I think, extremely convincing. The companies which are basically into the housing finance, they are also seeing a higher amount of traction with 20% plus kind of a growth. So including priority sector lending, some of these large banks are now having more or less, I think, higher amount of contribution coming from corporate, is having a balanced portfolio. My take would be that I think these banks are looking really interesting from the investment point of view. India investment cycle is actually opening up and higher amount of credit demand is taking place. So given that situation and given the price correction, probably I think many of the corporate banks, particularly in private sector, are available at a price to book value, which is
Okay. Devin, hi, good morning.
far more comfortable than it was ever before, given the kind of a growth that we have.
Sorry, I got that. Good morning, Devin. What are your thoughts on cement? Because this morning, CLSA has upgraded ACC to an outperform and raised the target price to 2,700 from 2,300. But on the flip side, they've downgraded Ambuja to a sell from an underperform. Just wanted your thoughts as a long-term investor. Would you buy any of these cement names now?
Yeah, good morning, Sonia. Demand scenario remains absolutely convincing, and I think there is no second thought on this particular subject. I would think that on the contrary, the demand scenario would remain extremely robust. Having said that, I think many of the cement companies in smaller pockets are likely to face the pressure on the cost side. If the pressure on the cost side is higher, then probably I think some amount of impact is going to be seen in on the margin, particularly I think the small to mid-sized cement companies. The larger cement companies, in my viewpoint, I think would be in a better position to beat the pressure on the cost. And to a greater extent, I think they would probably produce higher amount of profit performance. So cement is clearly a buy, and maybe I think some of the larger ones, including the SCC Ambuja combined, including I think the Ultratech, they remain a relatively better place given the kind of a demand scenario and given the kind of capacity that they have. I would think that there are two groups of companies, I think, which are relatively better placed compared to it.
Okay. Well, let's also talk about some more stocks. So, Devin, just stay on. Philatex India is the company on our radar. It's one of the largest manufacturers of polyester yarn, and the company has commissioned its project for debottlenecking a melt capacity of 50 million tons per day and manufacturing lines of 120 million tons per day. They've just commissioned that at their Dahej plant in Gujarat. To discuss more on this development and the business outlook, we have Madhusudan Bhageria, who's the chairman and managing director at Philatex India, who joins in. Mr. Bhageria, good morning and thanks for joining in. If you can tell us a little bit about this expansion, now that you have commissioned it, what are the kind of peak revenues that you expect, and what will this take your total capacity to?
Yeah, good morning. First of all, I'd like to correct you. This is not million tons, it's metric tons only.
Okay. Sorry about that.
Yeah. So this will take us capacity to almost 400,000 tons per annum. And peak revenues would go to around 4,500 crores. Going forward, we are thinking of adding more value-added products. So that will not add the top line, but that will add the increase in the bottom line.
So this 4,500 crores in FY22, you ended with about 3,800 crores of revenues, a little over that. So this 4,500 crores is for FY23?
FY23 we do around 4250 because this 120 metric tons which we have added per day is basically a value addition. We were making chips. Now those chips will be converting to yarn. So that is what we have done. So the top line will not increase substantially, but it will give an effect on the bottom line.
So what would the bottom line impact be, sir?
It's difficult to guess right now because the markets are not very good because of China. China this COVID policy, zero COVID policy. So they are dumping the goods everywhere. So the margins are under pressure. As and when China opens up, I think we should be doing better. And we think going forward, we should do more than double digit of EBITDA.
But, right. Is there any protection available for the industry against this kind of dumping? No.
No, right now there is no protection available.
There's no, okay. Could you just tell us what is the situation? I mean, I think at the end of the first quarter also you said, I mean, back then I think you'd referred to a lot of volatility in crude oil prices, which kind of did not allow you to realize the full potential back then. What's the situation now, if you can, both demand and raw material side?
Demand side is good. Raw material availability is slightly a challenge because there is some disruption in the local supplies. And internationally also availability of one of our raw materials, MEG, is pretty low.
Why is there a disruption?
Demand side is quite good, but there is a lot of imports happening from China at lower prices. So that is putting a pressure on our prices. Although volume-wise, we are doing almost full capacity.
Okay.
So the top lines would be good, but the bottom line would not be that good. As and when China opens up and maybe something happens, the crude volatility and the dollar volatility settle down, then the margins would also improve because the demand in the downstream is quite robust.
Okay. What is the issue with the local supply that you referred to?
Yeah, some of the suppliers have shutdowns in their plants and sudden breakdowns. So that is disturbing the supplies.
But regular maintenance shutdowns? Or?
No, it's not regular maintenance. Like one of our suppliers, Indian Oil, they have taken a 3.5-month shutdown for their MEG plant. Plants also is facing some issues in their MEG plants. So the supplies are disturbed.
So mainly the issue is with MEG?
Yeah, mainly with the MEG.
Okay.
Okay, that's interesting. So all of this will put pressure on your margins, I'm assuming, but crude prices have corrected from their highs. So will that sort of cushion your margins in the quarters to come?
Yeah, it will push in margins in the long run, but while it's going down, it puts pressure on the sales because the consumers stop buying. Also, we have to suffer on the inventory losses.
You also
but going forward, I think it should do better once it stabilizes. And also, third quarter and fourth quarter are better quarters in the year. And the demand is also quite robust because of the winter and festival and marriage season. So demand is quite good.
Okay,
so going forward, I think we should do better in the second half of this financial year.
What about the shipping rates? The logistic costs were very high about 6-8 months ago.
Yeah, they have also come down quite a bit. So that will also help us in improving our export. But right now, China is dumping everywhere in the world. So it's very difficult to compete with them in the exports. So exports have also come down. That is also putting pressure on the local markets for the supply.
There was some duty against that, right? So I'm sorry if I don't think, or was that abolished? Or was that PTA? There was some import duty.
Yeah, PTA used to have an anti-dumping duty that was abolished in 2020 February. But now again, investigation on MEG anti-dumping is going on. So something or the other is always there. So that also sword is lying if that comes into effect. Already India is very short of raw materials. Still, if anti-dumping on raw materials come, that will discourage for future production.
But the dumping that you're talking about is end products, right? From China.
No, this is anti-dumping on MEG.
No. What is being considered is MEG, which will hurt if it comes through as you're describing.
Yeah,
but the dumping that you're talking about,
right now the dumping which is happening of yarn is from China.
Is from China.
Because their internal consumption is very down. So whatever they are producing, although they have also cut production, but still they are trying to dump everywhere in the world at lower prices.
Oh, okay. So can you tell us this dumping of yarn from China right now, how much is it compared to say what it was about 6 to 8 months ago as a percentage?
Like 6 to 8 months ago, it would be very negligible imports, maybe 1 or 2% of the total consumption of India. Now I think it has gone to almost 8 to 10%.
8 to 10%.
But still, I mean,
India's
the local producers reduce their prices to stop that, but that affects the margins. No?
Okay, so 8 to 10% of the total yarn consumed is imported from China, is what you're saying?
Right now, yeah, for last 1.5, 2 months, it's
okay, and that's gone up from about 1 to 2% about 6, 8 months ago.
Right.
And what is the price differential of imported yarn versus what is being?
That is around 5 to 6% cheaper than the current prices of the local yarn.
Okay.
Got that. So I know you said it's difficult on the bottom line side to give any kind of estimation, but just a broad idea, ballpark kind of figure would help. How should one think about it? I mean, as compared to say to FY22, where would 23 numbers look? What would they look like?
I think we should be able to do very close to the double digit or touch double digit EBITDA in the full year.
Double digit growth in EBITDA over 22?
Yeah, not growth in EBITDA, the total EBITDA. Growth will not be there. I think we will not be able to match the EBITDA what we did last year.
Okay. No, that's helpful.
Yeah, we'll leave it at that, sir. Thanks a lot for joining us and giving us an update on what's happening. So that's important, right? We always talk about how raw material prices are getting hit because of what's happening in China. But even finished goods, I mean, the demand has slowed down so much over there. They're dumping all the cheaper goods in other markets like India. So it's hitting the domestic manufacturers. Let's do one thing. Let's take a quick break. On the other side of the break, Mitesh Thakkar and Sudarshan Sukhani will join in for some technical trades. Stay tuned.
Welcome back. That's the bad news that we've been telling you since morning. The SGX Nifty is down about 180 points. Bad, I mean, if you are a bull, if you're holding short positions, you would be very happy, right? Mitesh Thakkar and Sudarshan Sukhani joining us this morning. Gentlemen, good morning. Sudarshan, this market yesterday clearly told us that the texture has changed from a buy on dips to a sell on rally market. But what next if we open 180 points down?
Yeah, good morning, Anuj. You are quite right. For me, there's nothing next. I just wait patiently for markets to find support at some level or the other. Now, I was thinking 16,900. That is going to be broken today. The next support level is a small zone between 16,700 and 750. I'll wait for that. My trade is still to buy the dip, not to sell a rally. And it's not because the rallies cannot be sold. It's just that I have always found it to be more profitable to be patient and buy whenever the chance comes. So there is nothing to trade today for me.
Not even on the Bank Nifty as well, Sudarshan?
The Bank Nifty has a higher support zone at 38,000 approximately. But Anuj, if the Nifty is falling now, the Bank Nifty won't hold on. That's why as of now, the Nifty must hold support at some level before we look at the Bank Nifty.
Got that point. In terms of individual stock ideas, Sudarshan, what do you have?
I have Crompton, which is a buying opportunity still, because we'll get a large dip here. So adjust the stop losses, but buy Crompton with a stop under 391, and you have to adjust it a little. Everything else is a short sell. Hindalco is a short sell. The stock has broken down from a long trading range. It's looking at lower levels. 380 is your initial stop. Manappuram is a short sell. Same pattern, large trading range, significant breakdown. 96 is your stop loss. And Tata Power, which is in a small mini bear market already. It's an intraday short again. Stop loss 221. All short sells that I have suggested are intraday shorts.
Okay, well, Mitesh Thakkar is also back with us. Mitesh, your thoughts? Do you think this market has a big downside in store? Or do you reckon that we could be resilient around these 17,000 levels itself? And what are the stocks to look at today?
Good morning, Sonia. Actually, I was hoping for that because that was the 200 average area. There was also gap area.
But today the SGX is indicating further gap down. Now that should at least take us to the next level, which I had earlier highlighted around 16,750, 16,800 zones. And below that, I think, even 16,400 could be tested. So we are not out of the woods yet. I think the indicator setup on the daily charts is continuously getting weaker, and therefore suggesting that the downside could be slightly prolonged than what we thought earlier. Similarly, on the Bank Nifty, the corresponding levels would be about 37,750 to begin with, and maybe even 37,200, 37,000 zones could be tested.
Okay, Mitesh, what about individual stock ideas? Good morning.
Good morning, Anuj. I have a mix of buys and sells. Hero Motors is a sell with a stop at 2680 for targets of 2570. Coromandel Fertilizer, that's a sell with a stop at 1001 for targets of 950. And a couple of pharma names on the buying side. I think that's one sector which is kind of, working or showing strength in a market which is getting weaker. So Cipla is a buy with a stop at 1077 for targets of 1140. And IPCA is a conditional buy if it breaks 910, buy with a stop at 899 for targets of 940.
All right, Mitesh and Sudarshan, thank you very much for that. Great speaking with both of you as always every day. We'll take a quick break here. There's 5 minutes to go for the pre-open session. We are back. We have Jay Kale, Villara Capital to talk about demand trends in the two-wheeler sector and festive season, which is up ahead. Stay tuned for that conversation.